All right, welcome back. Today we are jumping into a deep dive that takes us right into the chaotic but really critical heart of digital democracy.
We're looking at the DeXe protocol, or DEXE, and the sources you sent over show one of the most interesting pivots I think we've seen in Web3.
It really is. I mean, this project started way back in 2019, focused on social copy trading.
Right, a way for you to just mirror the trades of successful crypto wallets. But they realized the real problem, the much bigger problem to solve, was how these massive decentralized organizations actually run themselves.
So they just, stopped trying to optimize the trades and decided to optimize the entire organization instead.
Exactly. They are now an infrastructure platform, and their whole goal is fixing the biggest, ugliest governance headaches facing modern DAOs.
So our mission today is to try and simplify this thing, because this isn't just about voting with your tokens anymore.
No, not at all. It's about building a digital democracy where, your expertise might matter more than your wallet size. And they're even integrating accountable AI right into the decision making.
Okay, let's unpack that. Let's start with the core problem DEX is trying to obliterate. Why is decentralized governance so broken right now?
Well, the number one issue is plutocracy. It's just masquerading as decentralization.
Meaning it looks decentralized, but it's really not.
Exactly. In almost every standard DAO, your voting power is tied directly to how many tokens you hold. We call it the whale problem.
So if you have 51% of the tokens, you control everything. It doesn't matter if you have any idea what you're doing.
Precisely. We got rid of centralized corporate overlords just to replace them with crypto billionaires who can swing a vote on a multi-million-dollar treasury all by themselves.
It just creates massive voter apathy, right? I mean, why would I bother voting with my 1,000 tokens if some whale has 10 million?
Your vote becomes effectively meaningless. And the sources called this a disbalance of incentives. Most people just buy the token, they sit back, and they hope the price goes up.
And that leads to super low participation, slow decisions, and just massive inefficiency.
And that inefficiency is deadly. Some of these DAOs are managing treasuries worth billions of dollars.
But they're using tools that look like they were designed for, an old internet forum.
Pretty much. They just lack real corporate-level tools for secure, sophisticated financial management.
And the security side of that is huge. We see these massive treasuries that are actually controlled by a tiny multi-sig group.
Sometimes just 4 or 5 anonymous people holding the keys to billions of dollars. That is the definition of centralization and a huge security risk.
Which is exactly what DEX is trying to eliminate.
Yeah, their whole pivot was about that. They decided to stop trying to, put duct tape on these broken systems and instead build a whole new foundation for governance.
One that rewards meritocracy.
That's the word. They want to reward actual competence.
They use this pretty grand phrase in the docs, achieving a platonic utopia on the blockchain. That's a huge claim.
It's a massive claim, but it gets to the core of it. They're trying to fundamentally change what determines your influence. It's not just about capital anymore.
It's also about what you know.
It's also about demonstrated competence.
Okay, let's use an analogy here to make this really clear. Imagine your DAO is like a huge community club or maybe an investment fund.
And it's struggling because a few really wealthy members are dominating every single decision.
Right. So under the old system, it's simple.
Yeah.
The more money you put in, the more votes you get. Billionaires always win.
A democracy in name only.
Now, you install the DeXe system upgrade. Suddenly, it's like the club decides to professionalize. They bring in a vetted group of experts.
You're talking certified financial advisors, legal counsel, people with proven track records.
And these experts, as DeXe calls them, they get a huge boost in their voting power, not because of their cash, but because they're certified as competent.
And then here's the modern twist. The DAO also hires a super smart AI consultant.
An AI consultant.
Yeah, to analyze market risks, optimize the treasury, that sort of thing. But, and this is crucial, the AI has to operate under incredibly strict, accountable rules that are enforced by code.
So you're shifting from this chaotic town hall meeting to a really sophisticated organization with human oversight, elected specialists, and automated, trustworthy execution.
That's the vision. And to make it happen, they had to build some serious infrastructure. It's really an operating system for DAOs.
Built on a library of over 50 specialized smart contracts.
At 50. It's a huge modular system running on Ethereum and BNB chain, ready to be plugged into these big organizations.
50 contracts says.
Yeah.
Wow, that's both impressive and a little daunting. So let's get into the mechanics. First up, how do you stop the whales? How does this nonlinear voting system actually work?
Okay, so this is step 1 in fighting that plutocracy. In a normal DAO, 1% of tokens gets you 1% of the vote.
Simple, linear.
Right. DeXe makes it nonlinear. Your voting power grows normally, 1-to-1, but only up to a certain point. Let's say it's set at 7% of the total supply.
Okay, so if I hold up to 7%, my power is what I'd expect. What happens after that?
After that 7% threshold, the voting power you get from each additional token drops off sharply. Exponentially, in fact.
So my first 1,000 tokens might give me 100 votes, but my next 1,000 might only give me 10.
Exactly. And the token after that might give you even less.
That's clever. It means a whale can still buy tokens, but they can't buy disproportionate influence. It makes a hostile takeover incredibly expensive.
It completely changes the game. Which brings us to step 2. Incentivizing competence through expert delegates.
Right. If you weaken the power of money, you have to boost the power of skill. How do they codify that on the blockchain?
They create a special expert role, which is represented by a unique NFT, an ERC-721 expert NFT.
And this isn't just a JPEG, I'm guessing.
No, not at all. To get one, you usually have to lock up significant collateral, pass community tests, or get elected. You have to prove you're competent.
So it's like a high-stakes license to govern.
Precisely. Now, if you're a regular token holder, the person who normally wouldn't bother voting, you can delegate your voting power to one of these approved experts.
And that's what creates the market for good governance.
Yes, and here's the reward structure that fights the apathy. The expert earns a 20% commission on any delegation rewards for making good, active votes.
Okay, so they're paid to perform. What about me, the delegator?
You, the regular user, earn the other 80%. You get paid for participating just by choosing a competent representative to vote for you.
That is a huge behavioral shift. It's an investment, not a chore.
Okay, let's talk about the future, the AI consultant. Step 3, accountable AI. How on earth do you trust a robot with billions of dollars?
This is maybe the most innovative part. The agent-bound tokens, or ABTs. DeStake integrates AI agents, trading bots, risk engines directly into the governance.
How does the DAO know who the AI is? How is it held responsible?
The AI gets issued a special, non-transferable ABT. It acts as its on-chain identity, and most importantly, its collateral.
It's collateral. You mean like a security deposit?
Exactly. Think of it as a bond the AI has to post to guarantee its good behavior. So if the AI goes rogue, makes a bad trade, or tries to front-run an order, what happens?
This is the accountability layer. If it acts maliciously, its ABT collateral can be slashed or even burned.
Wait, let me stop you there. Who decides if it was malicious versus just a bad market call? Does the DAO have to vote on every single bad trade?
That's the critical piece. The human governance layer is the final check. The human voters, or the expert delegates, have to initiate the action to slash the collateral.
Ah, so it's a hybrid system. The AI brings speed and efficiency, but humans hold the ultimate power of judgment and punishment.
Precisely. And if the AI performs well over time, its reputation and its influence can actually increase.
Fascinating. And they also built a bridge to the real world, right? Because a smart contract can't sign a legal document.
Correct. For anything that leads real-world execution, DeXe is supported by the DeXe Association, a nonprofit registered in Zug, Switzerland. They act as the legal arm to translate on-chain votes into real-world action.
Okay, let me play devil's advocate for a second. Doesn't having a Swiss nonprofit as the final step kind of undermine the whole decentralized thing? Isn't that a single point of failure?
That is a fair and really important question. It does introduce a necessary point of centralization, but only for that final physical execution. The decision-making, the what to execute, remains fully decentralized on-chain.
It's a pragmatic compromise.
It is. It's a compromise many high-value DAOs have to make if they want to interact with the legacy legal and financial system.
That makes sense. It's the cost of doing business at a corporate level. So let's get practical. What does all this complex tech mean for, a regular person or a founder listening?
Well, the key benefits are accessibility and scale.
So benefit one is accessibility. The DeXe DAO Studio is a no-code dApp. You don't have to be a coder to launch one of these super customizable DAOs.
Exactly. It lowers the barrier to entry for creating really high-powered organizations. And the structure is designed to reward you for getting involved.
Which is benefit two, financial incentives. If you hold DXE tokens, you can stake them for pretty solid rewards. The sources mentioned APY up to 25%.
And as we covered, just participating by voting or delegating is directly rewarded with more DXE tokens. It fights that apathy problem head-on.
But the real proof, is in the scale they're already managing. This isn't just a theory.
No, it's very real. And that's benefit 3, financial security and scale. The total value in treasuries managed by DeXe DAOs is over $2.8 billion.
Wow.
But here's the kicker. DeXe DAO's own treasury, which is worth around $1.2 billion, is fully managed using its own protocol.
They're eating their own dog food, so to speak.
And when a project trusts its own experimental system with $1 billion of its own money, you know they believe in the code.
Absolutely. And finally, benefit 4, the deflationary token model.
This is about sustainability. The protocol collects 30% of all platform fees and uses that to automatically buy back DHC from the market.
And then what happens to those tokens?
It's split into thirds. 1/3 is burned, which is deflationary. 1/3 goes to an insurance pool, and the final third goes back to the XC holders as rewards. It's a self-sustaining cycle.
Okay, that all sounds revolutionary. But now we have to introduce some caution. Because in Web3, high reward always comes with high risk.
Always. And the platform's greatest strength, that massive, complex code base with over 50 smart contracts, is also its #1 weakness.
The technical complexity.
Yes, it creates a gigantic surface area for potential attacks. You have 50 different places where bugs could hide.
And the security history shows this is a real risk, right?
It does. I mean, they've had multiple audits from top firms, Certic, Hacken, Cypherin, but past reports, like one from Hacken in March 2023, found 2 critical and 14 high-risk vulnerabilities.
Too critical. What did that mean? Like lose all the money critical?
Potentially, yes. The issues were related to things like flash loan attacks and conditions that could lead to an unauthorized loss of funds from treasuries.
And they fixed those.
They were reportedly mitigated or fixed, yes. But the fact they existed in the first place just proves the constant high-stakes risk you run with code this complex.
Okay, shifting to market risk. Let's talk about the token supply.
Right, the elephant in the room. Market pressure from vesting. A huge chunk of the initial supply, 53%, was for the team and foundation, and it was set to fully unlock by October 2025.
So that creates a potential for massive selling pressure, which is a big risk for anyone holding the token today.
A very big risk. Then you have the competition. This is a tough market. You have established, well-funded players like Aragon and Safe.
And DeXe's trying to be the professional tool, which might mean they lose out on the mass market appeal that their rivals have.
It's a trade-off. And finally, you have the big one, regulatory uncertainty.
The ever-present legal shadow.
Exactly. The legal status of DAOs is already murky, but the governance of autonomous AI agents using these ABTs, I mean, that's completely uncharted legal territory.
A major long-term risk that even a Swiss nonprofit can't fully eliminate.
It's the risk you take when your innovation outpaces legislation.
So, to sum it all up, DeXe made this incredible pivot from a niche trading product to a seriously comprehensive DAO operating system. It's focused on large, complex organizations that need power and accountability, even if that means sacrificing simplicity.
And if you need that one-sentence summary for your notes, here it is.
DeXe is an advanced DAO infrastructure that uses non-linear meritocratic voting, specialized expert roles, and accountable AI agents to replace plutocracy with competency, establishing a new, highly effective standard for decentralized governance.
And this all raises a really profound question for you to think about this week.
Go on.
If DeXe can prove that an accountable AI agent, secured by collateral and checked by humans, can vote more rationally and efficiently than human token holders, how far away are we from completely delegating our financial decision-making to the blockchain and its AI consultants?
A truly provocative thought, and definitely one worth chewing on.
If you found this deep dive interesting, please like and subscribe to the channel. We do all the complex research so you don't have to.
Thank you for joining us for this deep dive.
We'll catch you on the next exploration.